All gone people, my name is Sean, and in this video we'll be talking about what is a stock and how to buy a stock as a beginner.
Let us talk some business. Let us talk some business.
Okay, first thing, stocks and shares are the same thing. It's potato, right? So stocks and shares are the same thing. Do not worry about shares being a unit of measurement and those technical definitions because it's just syntax. All right, so stocks, shares, they could be used interchangeably, which I'll be doing in this video. Okay, all right, that done. All right, what is a stock? A stock is literally a piece of a company. Just like how you have a pizza and you cut a slice out of that pizza and the pizza slice is a piece of the pizza, a stock is a piece of a company. Now, you might be asking, how comes this thing come about? Well, corporations, when they need large funding that you don't get from like traditional bank or lending institute, they make their company go public and then they offer shares to the public. That's all. So companies that need money say, hey, you know what? Let us offer a piece of our company to these people in exchange for their money. That's how you get stocks. Now, I want you to follow me closely. When you buy a stock from a company, you are part owner. That's why they call you a shareholder, stockholder, same thing. You are part owner of that company. Okay? Now, because you're a part owner of that company, you are entitled to profits the company make, and you also suffer loss as the company suffer losses. And we're going to get into that. So I want you to understand this. Stock is literally part ownership of a company, right? You exchange a share for your money, right? Companies issue stocks to the public because they need funding, and also you experience profits when they get profits. You experience losses when they do losses. So look at this. If you buy a stock in a company and that company is doing well, they become very profitable, chances are the stock price is going to increase, right? Because the company is doing well, they're getting profits. If the stock price increase and you've already bought a stock from that company, your portfolio increases as well. Now, on the other side, if the company is doing bad and the profitability goes down and they start incurring a loss, if you already bought a stock from them, because of the loss the company experienced, the stock price tends to go down with that and your portfolio value decrease. So your stock that you have never remains static. It either goes up, goes down, but it never stays at one value. All right, let me put it in a different way. If the company is a booming company, keep on increasing, the stock that you have is going to increase in value. However, if the company is going bankrupt, or not necessarily bankrupt, but doing really bad, the stock price is going to go down. So that is the risk you take when you buy a stock. All right. Now, if the company, some companies do this, they pay you money per quarter, every 3 months, and that's an additional money from the profits they make. If they're doing really good, they'll give you money and say, you know what, you've been a great shareholder, we appreciate you, here's extra money. That money is different from the increase in value that you have from your stock that you already have in that company. But if a company is doing bad, you don't get no dividends. So any money that is paid to you per quarter because the company experienced a profit, that is called dividends. Dividends are a great way of accumulating cash. That is when you start to get into the meat of investment. Instead of having the money in the bank growing little to no interest, you get a stock that increases in profitability. Therefore, the stock price shoots up. And then on top of that, every 3 months, you have an additional money being paid back into your brokerage account from the company. As I said before, some companies pay you dividends, some don't. I'll be showing you guys the companies that pay dividends. I'll have different videos showing how to go about doing the fundamental analysis, the technical analysis, also sentimental analysis on how to decide which company to choose, which stocks to choose that pays the right dividends, that increase in profitability, and all of that. But as a beginner level, these are the building blocks you need to know about what is a stock, and so on. So let me just pause to say that I'm not a business consultant. I'm not a financial advisor. I don't represent no stock, no company. All I do is do a lot of research. I have experience in this field, and I'm spreading this knowledge for free. That is all. All right. So let me give you an example. Right. John has $100. The cost of one Apple share is $100. John buys an Apple share. All right. So that's in his brokerage account now. He has an Apple share. Let's say Apple comes out with a new phone tomorrow that allows you to teleport when you make communication. So you get a call, you teleport to the person. That's going to shoot up stock price all the way up. So let's say, for argument's sake, the stock price shoots up to $150 from $100, right? Remember, John bought it for $100. Now, the stock price of Apple, because it got this magnificent feature in its new phone, shot up to $150. John's stock is now worth $150. If John is to say, you know what, I want to cash out and sell that stock, he makes a $50 profit. Understand that? He bought it for $100. Apple came up with a new majestic phone. Stock price went through the roof, $50 to be exact. John got an additional $50 in value to the stock. He sells it. He makes a profit of $50. That profit that he makes is called capital gain. Understand? That's the proper terminology for it. Capital gain. Now let's flip the script. Let's say Apple come up with a new phone, and that phone, it start exploding in people's ears, killing people. People start banning Apple phones. Stock price is going to go down. Let's say it goes down to $50 from $100, right? The stock that John bought for $50 is now worth, for $100 rather, is now worth $50, right? So the stock price went down from $100 to $50. And let's say John has an emergency and he needs funds right away. He lost his job. All he has is the money in the stock, and he got to sell that stock to get as much money as he can. Now, when he sells that stock, he's suffering a $50 loss. That loss is called capital loss. So capital gain is when you collect a profit from the stock that you initially had. So you sell at a higher price. The money you make in profits is called capital gain. Capital loss is the money you lose when you sell the stock. All right? So you got capital gains, capital loss. All right? Again, if you're not understanding what I'm saying, please leave a comment in the comment section, and I'll either do another video or I'll address you directly. Now, this is a very primitive way of putting it over. Stocks really fluctuate a lot on a daily basis. And this is talking about investing in a stock. I'm not talking about trading. So as beginners, I want you to just focus on investing. So the situation with John is that he could hold his stock too. So let's do a quick little summary. So far, you now know what is a stock, which is part ownership of a company. You know what is capital gains, the profit you make from selling a stock. You know what is capital loss, the money you lose, or the loss you incur from selling a stock. And you know what's a dividends. This is money gained due to the profitability of a company over the course of 3 months, right? So you're now equipped to trade, or invest rather. And I'll be showing you how to do that. There are many platforms you could trade on. Many. But the simplest one, in my opinion, is Cash App. Almost everybody got Cash App. And one of the many reasons I love Cash App is because if you don't have the full money for one stock, you could buy part of one stock. So, for example, if the share costs $50 and all you have is $5, you could buy $5 worth of that share. Yeah, that's called fractional trading. So you own a fraction of one share and you're still entitled to some profits that the company offers. You could get dividends from that little money. It's going to be in cents because you're investing little to nothing, but at least you're getting back more than what the bank gives in interest. All right, so look at it like that. I want you to get in that mentality. Any money gained more than what you have sitting in the bank is great. You understand? You could have 10 million in the bank compared to 10 million in the stock. The stock value will increase. You could get dividends. Bank is not going to give you that much money. I recommend you start with Cash App just to get the feel of things. You could get dividends paid to you in Cash App too. I'm going to show you the stock. The stock that I'm talking about is Pfizer. I love Pfizer. It's a pharmaceutical company. It's stable. And I'll be showing you right now how to buy a Pfizer stock. So pay attention. So you open Cash App. You hit the lower left tab, which is the home. That's your bank information and stuff. The page next to it is a promotional page. The other page after that is where you could send money from your Cash App or your bank to other people. And the page we're here for is Cash App. That tab next to that $, Cash App investing page. Where you see stocks, discover a stock, you hit that, discover a stock. You see the categories of stock below. We already know the stock we want. So, I'm going to enter it. Pfizer, Pfizer, it's spelled. Alright, enter that. Click the stock. See the option buy, follow the stock. You scroll all the way down. You see the share price of $34.92. Company values at over $194 billion. You could see the category, health category the company is in. It's a pharmaceutical company. Right above that information, you have a little description about the company. Right, you could read that in your leisure time. And then right above that, you got the news from Market Watch. Got news on Pfizer, other pharmaceuticals. Alright, it's time to buy. All you gotta do is click buy. Now this is where fractional trading comes in. We don't got those money that's listed, so we touch the 3 little dots. We enter the amount of money we have to invest in Pfizer. In this case, it's $10. I enter that. Right? You get a prompt of questions. You answer no, you're a beginner. then you enter the PIN that you created when you first opened Cash App. You don't have the stock yet. You got to confirm. This is just an information page that you've been verified, so you have to confirm. This shows you the fraction of the trade, everything. You hit confirm, and then congratulations, you now purchased $10 worth of Pfizer. You are now an investor. It's as simple as that. All right, everybody turn big time investor, you know. Yeah, man, straight. I'm very happy, guys. You know, if you haven't subscribed to this channel yet, just subscribe. Share this channel. Share this video. Spread the word. A lot of people don't know how to invest, and this is literally the building blocks of investing. So thank you for your support. Let's spread the love. All right. I have a lot more videos coming out on what type of stocks to invest in, when to invest, how the stock market works in depth, because those are the next information you need going forward as an investor. Thanks again, guys. I appreciate you. All right.